Since we kind of have a good understanding that the market is basically following the money supply, aka following what the Fed is going to do, one of the most beneficial things to know is, well, what is the market's projection of what the Fed is going to do? Now, I have linked below this video in the description for you to go ahead and go to this tool and learn about it yourself. But suffice to say, if you're somebody who wants to understand what the market is pricing in terms of future federal funds rates, you can do that. So as of right now, the federal funds rate is 3% to 3.25%. In November, which is just a couple of days from now at this point, you can see what the market is pricing in. So the market is expecting a 97.7% chance that the Fed is going to increase their interest rate to 3.75% to 4%. That would be a 75 basis point rate hike. Going out to December, it starts to look a little bit different, right? Again, if they're going to do 75, for example, if they're going to do 75 going out to November, and that gets you to, what is that number in November? That gets you to 3.75 to 4. The idea is by December, we'll already be there. And then what does it look like in that December meeting? Well, it looks like the expectations are for another 25 to 50 basis points is about 47.4%, and about 51.6% is another 50 basis points would be the expectation. So if you're someone like me who tracks the information because you're a believer that the market is basically following the Fed, well, click on the link below this video and then click on the user guide and video demo, and then you'll have a pretty good understanding, if you want to each and every day, how the market is pricing in what their expectations are of what the Fed is going to do.